Hello, everyone. We still have a few people logging in, so we are going to give them a few minutes to get settled, and then we shall get underway.
Good afternoon, everyone. I hope you've had your coffee because we have an excellent afternoon full of really interesting presentations. My name is Ming Wang, and I am from Opal, a Singapore-based fintech. As a member of the Remittance Subcommittee under both the SFA and the Remittance Association, it is my pleasure to bring to you our panel of RegTech and compliance experts who will be sharing as much as possible about some of the latest trends on the topic. Without further ado, I'd like to introduce Mr. Ho Chi Wai, who is our co-chairperson of the Remittance Subcommittee, to say a few words. Chi Wai.
Thank you, Mi Wang. As a chairperson of this SFA and RAS subcommittee, it's a great privilege to work with very passionate members in the committee to see what are the initiatives that we can really value add to our members, whether it's from SFA or RAS. And all these initiatives don't come from the air. Since our inception back in March, the team has been busy launching our survey and trying to gather understanding from the members to see what would be most pertinent and what would be the top in their agenda on areas that we can help our members. And certainly in the areas of RegTech and TRM, they are high in the list. In fact, based on the survey that we sent out to the members, 62% indicated strong interest in understanding more about RegTech, and ditto 52% on the technology risk management. And which is why we felt that as our very first session that we are sharing with our members, we want to kickstart with this. And I'm really glad that it was timely because in April, MAS has also announced this initiative of theirs to offer incentive for FIs embarking on the RegTech. So we thought it was timely that and a good honor and privilege that we managed to invite Alvinda to join the session, along with wonderful speakers covering various aspects on the RegTech. So I hope all the members will enjoy this. This is our first session. Do send us your feedback, but certainly we are planning for the next few sessions covering different topics in the following months. Thank you.
Thanks, Chi Wai. So I'm sure everyone who's attending here today has seen the latest news about MAS committing, I believe $42 million to spur the adoption of technology solutions for risk management and regulatory compliance, because it is a very important part of our industry. And for that, we've got the honor of having Mr. Alvinder Singh, who's the Deputy Director from the Monetary Authority of Singapore, to share a little bit more and shed some light on this topic. Alvin, the floor is yours.
Thanks, Ming Wang, and I believe everybody can hear me. So yeah, I hope everybody's staying safe and all at home and all. I see different Zoom backgrounds, so I assume all of you at home. There's no consistency in the office team. But yeah, and I'm sure all of you are looking forward to 4 o'clock where the Prime Minister will speak live, so, and what he will say. But so yeah, I am just a fiddler, I guess, as far as this conference is concerned. All right. 42 million, that's what Ming Wang said. Now, first and foremost, I think, yeah, the press release, when we combined it, we were a bit cheeky as well by suggesting that it's 42 million for RegTech, but actually it's broken up into 2 components. One is the RegTech component and one is the digital acceleration grant component. Now, the RegTech component, we are setting aside $12 million. It's a big sum. And then for the digital acceleration grant, it is a grant that we brought forward from last year where we introduced COVID measures. Strong take up and all that things, and we thought, hey, we are still in a COVID world, not in the post yet, and obviously not in the pre. And so we decided to refresh the grant by injecting another $30 million to that. But I will not focus on that. I mean, I can speak about that later, but I won't. So let me just share my screen on the new thing, on what we are doing that is new, which is actually our RegTech grant. Now, I'm sharing my screen right now, and let me just get it to the big. All right, yeah. So the RegTech grant here, and this is actually for information. Now, first and foremost, what is RegTech and all that thing? So I'm speaking to an audience that know this, but I will just be brief about it and say that it covers everything from AML, CFT, digital identity, market and trade surveillance, credit monitoring, liquidity risk monitoring, reg reporting, and reg change management. And later we will show you what MAS in our surveys, where all the activities are dominated and where we see little activity and all. But it covers a whole variety of activities and all that things. Now, we also know that it's a constantly growing and global market. So these are surveys done by Bloomberg and KPMG respectively. You will see that actually a dominant force in RegTech is actually the Americas. A big part of it is where the firms are headquartered. This is 2019 numbers, of course. You have 17% of them there. Singapore has about 4%, which is a sizable lot given our small size. But the whole of Asia and all that things, the whole of APAC only covers 20%. So more than 3 billion people, but only 20%. And that is the number that we think should not stay static. It should go up and all that thing. So Singapore wants to play a leading role in ensuring that hey, RegTech firms are domiciled in this part of the region, with Singapore as their hub, and RegTech is used widely. So we see investments going up as well. And of course, the 2020 numbers are not in yet. We expect it to go down a bit for sure. But in Singapore, we see at least 32 firms. This number is growing, but we don't do a census very often. So we see that at last count, we had 32 firms, a whole variety of them and all. And one of our RegTech firms, a local RegTech firm, Tukitasi, actually won the G20 Tech Sprint Challenge, and that was their solution for I can't remember now, but it was in the money laundering space, if I'm not wrong. So it's good that there is recognition at the global level, because the G20 Tech Sprint, this was for the Saudi G20 presidency. So there is actually global recognition that we produce good tools. Now, again, but COVID has also shown that people are actually going down and going back to manual methods and all that things. You will think that COVID, and the meme that has always been sent around, COVID is the main spur of digitalization. But we see that some aspects of digitalizations are taking a back seat, and RegTech is one of them. People going back to the older methods and all. And we see that as well. So even in Singapore, we see that SMEs are not going beyond Excel spreadsheets and databases and all that things. Whereas people acknowledge that COVID has actually impacted their digital plans, but yeah, and then the whole notion of manpower, cost, and all that things coming in. And so these were all the surveys, and of course, additional data points that I'm not at liberty to share in this presentation that actually forced us internally at the authority to decide, hey, we need to do something, and let's think about what else we can do to actually spur innovation, or at least keep innovation at this level, and then hopefully we can actually elevate it with more measures and all. So again, in our survey, when we did some adoption, we realized that actually there's a lot of evidence of it being used, especially in banks, for AML, CFT, for digital identity, customer onboarding, and all that things. But as we go down the spectrum, now this spectrum is supposed to appear in color with green on one side. I'm not sure why it's all grayscale. It doesn't matter. Now, so if you look at it on the more evident side for AML, TFT, and all that things, but as we go down, then these are actually the important ones. Everything is important, but the most manual effort is actually put into reg reporting and reg change management and all that things, because the regulator doesn't say step in. We are refining our notices, we are refining our guidelines, we are refining our rules and all that things. And so we need institutions to know what is happening and actually see how it affects them. So that's the reg change management part. For reg reporting, I think it's no secret that MAS is undergoing a fundamental relook at all our reports and all the data that we collect and see whether we need to be more granular, less granular, and all these things. So there are changes, with one of the biggest banking notice being changed, or actually undergoing changes right now. So and so on and so forth. But we see little evidence. So there's a lot of manpower being thrown onto so if I can use my right side of the spectrum, and it's something that we want change. So of course the focus is on everything. In this case here, we want to cast the net wide. So what do? We actually create a grant. Now this is something that Singapore has the advantage of. We have the ability to use to allocate a bit of funds to actually solve the problem, because we do believe that money is a big issue. Investing in technology is a significant line item in a balance sheet and all that things, and we want to see how we can help. So what we want to do is support the financial institutions based in Singapore to enhance their risk management and compliance function through the use of technology, as well as support upskill efforts, because the use of technology will always affect the individual doing his or her job. And we want to make sure that efforts are supported. So as part of the grant, when you want to use a technology tool and all that things, training for your staff is actually an item that you can claim for as well, because we want to support the training for the staff. We do not want somebody to be unemployed and all, or redeploy into a job that they are not good for. So there are two tracks which I'll go into in a very short while, which is the production level project and the pilots. Now in the coverage, so I've covered this at a fair bit in the earlier parts, but we cover almost everything that you can do in the regulatory compliance space, everything. And if you look at number 6, general compliance and reg tools, basically everything under the sun that doesn't fit into 1 to 5, there is 6. As long as it fits into the notion of risk management and reg compliance, that is something that we will consider. Now, what are we doing then? We are funding it at 2 levels. One is at the production level, and one is at the pilot. Now, what is a production level? It means you are sure that this is a system you want to use. You want to integrate it into your institution's DNA, your institution's tech system, and all that thing. And based on our market survey, the cost on average, this is usually implementation cost, consultancy costs to actually decide how to implement it and all. Usually, it is about $500,000, if not lesser and all. So what we have decided, of course, is we are going to fund 50% of the qualifying expense. Now, what does this mean? Many people always ask us. It means that if something costs $500,000, we will fund $250,000, as easy as that. Okay, the qualifying expenses, I mean, I have put it into this slide, but that is what it means. And you have 18 months to implement it. From the day your consultancy starts, okay, I want to change the way I am doing something in the risk management space. Till the day you have 18 months after that, and to actually do this. Now, but we also noticed that in many of our grants, we stop here at production level. But in this grant here, when I was designing it with my team, we were like, for risk management and compliance, people are reluctant to use technology because the risk of being wrong is actually very high. And the risk of being wrong has got a high cost in terms of getting into trouble with the regulator, not spotting risk in advance, and so on and so forth. And then the reluctance come in. So we were like, what can we do to actually soften this a bit? And so we decided to have a pilot track. Now, what does this pilot track do? It means that if, let's say you see a software or you want to implement something, you're not sure whether it will work in your institution. So the vendor comes to you and says, hey, my AML solution is brilliant and all that things. You challenge the vendor and say, okay, let's work to apply for the MAS grant. It's funded at 50% up to 75, so it's the same. It means that up to a max, if it's $150,000, we will pay the maximum 75,000. Anything more than that, it will still be 75,000. But up to a maximum of $75,000, 50% qualifying expense, you let them come in and you try it out. If you are satisfied, you move to the production level and you can apply for funding there. Now, why is there a difference here? Because we do believe when things go into production, there's a lot of other hardening to do, whether it's at the cybersecurity front, data integration and all that thing. So it never stops. At the pilot, you're doing a dirty pilot, minimum databases, assumptions and all that thing. So which is why you're allowed what we call a double dip. From pilot, you do it once, you're satisfied, then you go into production level and you put it into full production. Now, what if it fails then? All right, all we need is for you to explain to MAS why it has failed, what you seek to achieve, which is your initial proposal, and why it was not achieved, and satisfy us that, hey, this is due diligence for all done, and we will release the fund to you. Because there's no reason, because we know that pilots will fail in some instances. Because don't fail for no reason. Anyway, there's cost to everyone. We're not doing a full funding. So I'm sure you will not want to just misuse it. Now, for smaller FI, which is less than 200 people, it is 70% funding because we do believe that these are the people we need to upskill in terms of their digitalization efforts. So we provide a greater incentive here. And of course, for pilots, it's up to 12 months because there's no reason for an 18-month pilot in our experience. And the qualifying expenses are all there, whether it's salary, whether it's professional services, whether it's software and all that thing. So this is actually it's actually a simple grant and all. Now, what this slide doesn't say is, one, when you want to do this, first and foremost, let us know 3 months in advance, at least 3 months in advance. Two, now, if your project involves very advanced techniques, AI and all that things, now there are other grants that pay out a lot more. It's called our AIDA grant, AIDA grant, and all. Leverage on those grants. This grant, if your software is going to use AI and all that things, chances are 50% qualifying expenses usually will not be sufficient at all at 300,000. So we have other grant schemes in force already for that. So use that. And all this information, including the application form, everything is on our MAS website. I'm not sure. Okay, I didn't hyperlink it here. I didn't link it here, but it's all on our MAS website. So just go on and see it. It's all there. And yeah, so this is actually how the whole ecosystem of why we want to do this and then what we are doing with respect to the grant. Of course, there are many other things we are doing with RegTech and all that things, but at this stage here, I'm only at liberty to share with you this aspect of it. And I am happy to take questions. I'm not sure how the question is run and all that things. Happy to take a few questions, and then I will wish all of you all the best for this session and all. Thank you. Ming Wen, I think I go back to you, right?
Hi, that's correct. Thanks, Alvinda for that. So we appear to have one question from the audience. For the information, for everyone who's listening in, please feel free to include and post your questions in the Q&A section, because we have allocated significant time for each presenter to take a question. Well, when I say significant time, I mean about 10 minutes. So we've got one from Rajinder. He says, thank you for your presentation. Is the RegTech grant available to vendors providing services to improve digital security, or available only to companies intending to purchase and implement a digital security software? Thank you.
Rajinder, thanks. Available to vendors. Okay, now I may not have been explicit about this, so I'll just be clear. Now, only regulated financial institutions can apply for this. They can work with vendors. Vendors can help them to fill up the proposal and all that things. But the nature of MAS is that we fund the institutions, the FIs directly and all these things for these. So in terms of the use case you mentioned, digital security and all that things, I do think a case can be made that there is actually a risk management or compliance, regulatory compliance use case for it. And hence the answer to that would be yes, in general. But again, it depends a lot on the proposal and what the institution that is seeking funding for seeks to use it for. So I will just stop there and say that, in general, if a case can be made that it's for RegTech purpose, then sure.
Okay. Thanks for that, Alvin. Perhaps, I just received a message, sorry, from our host that I think we'll probably proceed after. I know we've actually got one question from Krishna. Maybe we can just take one very quick one and maybe jump to the next one. He's just asking, would acquisitions associated to RegTech platforms also be funded? Acquisition meaning purchase of the technology and applying for trademark protection in Singapore.
No, not within the scope of the grant. The grant, like I say, it's supposed to be a simple grant for FIs to tap on to actually fulfill their RegTech agenda. So no, unless, of course, the case can be made that it fulfills that agenda, but in most cases, no. As an anonymous attendee, I'll just do this as the last one. The answer to the question is no in almost all instances, unless a strong case can be made that we need to fund this, although the services has already been engaged or paid for. But a very, very strong convincing case will be made. Most likely the bar won't be reached. We don't do that. It must be, you must not have started when you apply for the grant. Yeah. I think that's about it. And I wish you guys all the best. I will exit the conference and get back to my day job.
Thanks so much, Alvinda.
All right, see you.
Take care. Okay, so next up, we actually we've got Paul Haji, who's the founder of Horangi. He will be here to share about technology risk management. I think there has been some, from what we understand from on the ground, there may have been some anxiety around some of the requirements around TRM. So hopefully Paul will be able to allay some of our concerns. Paul, please go ahead.
Sure. Can you guys see my screen okay? Yeah. All right, cool. So I'm Paul Haji. I'm the CEO and co-founder of Horangi Cybersecurity. So just a bit of background about us. About a 5-year-old startup headquartered here in Singapore, raised a little over 20 million from VCs around the region. Focused on headquartered here in Singapore, but have operations in Indonesia, Hong Kong, US. And what we do is we build a product that helps with cloud security compliance with AWS, GCP, Azure, and soon Ali Cloud. And then we do services that help people comply with things like MAS, TRM, as well as other compliance standards, and also do penetration testing, which helps companies comply to compliance standards, or just help them understand the security issues and help them remediate those in their infrastructure. So today, I'll be talking a bit about the MAS TRM, a bit of history around it, as well as some of the new updates that were released in the most recent version in January 2021. Cool. So I guess the origins of the MAS TRM, it was actually launched in June of 2013. And really, I think MAS, and not speaking for them in any manner, to be clear, went out to kind of help companies that are regulated secure their infrastructure and organization. And they did that by focusing on 3 major pillars. So they wanted to establish a sound and robust technology risk management framework. They wanted to strengthen system security, reliability, resiliency, and recoverability. And they wanted to be able to deploy like strong authentication to protect the consumers, but also protect the organization itself. After this, a couple of years later, they actually, the chief cybersecurity officer at MAS came out and said that they're going to be releasing a new MAS guideline called MAS Cyber Hygiene, which is actually released in 2019. So that focus was a bit more detailed in terms of what they were doing. The first one was kind of a rough guidelines, whereas the cyber hygiene was very much more directed. So these are some of the major standout sort of recommendations that were made for companies to kind of secure their infrastructure. So some of those revolved around these 6 things. So administrative accounts, making sure that people that should have the access, but also making sure companies are kind of practicing least privilege, so only the access that they need to do their jobs. Making sure companies do regular security patching. So kind of ensuring that if you're in a more traditional IT environment, you're updating the operating systems of the computers you're using, upgrading the operating system of servers, and updating the software in your environment. They also made sure that each organization kind of came out with security standards for their organization and policies, which is quite important. network perimeter defenses, malware protection, as well as multi-factor authentication, which of course is one of the biggest things you can do to reduce your risk. And then more recently, they kind of came out with the MAS CRM updates in 2021. And this was focused on something a bit different from the rest. Some of this stuff was covered in the previous regulations that were released, but this one specifically focused on third parties. So really, this kind of was driven by the sort of breach from SolarWinds. It came just 2 months after that, which is quite a quick release from them. And really, they wanted to focus on making sure that people are thinking about, of course, their organization's security, but also the third-party vendors that they work with. So making sure that not only yourself, but the companies you work with have standards around security and do take due diligence and take security seriously. A big risk, especially for a lot of the companies that are kind of doing technology, is using open source software. So making sure that you're kind of scanning your software, doing source code reviews, either with a third party or internally, doing secure architecture reviews, doing things like penetration testing, and building a process around how you release code, and also how you use open source code and how you update that open source code. Another big piece that was, again, mentioned kind of previously in the other MES releases, but much more focused in this one, was talking about on-time vulnerability remediation. So making sure that companies are actually fixing and identifying security issues quickly and remediating the critical ones within a certain time period. And last, and probably one of the most important ones that I'll dig into a bit more in the presentation, was focusing on vetting third parties. So in a lot of cases, depending on whether your business is, a fintech, whether your business is kind of in the middle, so a more traditional organization that uses technology, or whether you're just a sort of traditional FI, making sure that you do have some sort of third-party vetting process in your organization, even if that's just as simple as a 5-question survey, something that kind of identifies that the organization you're working with does take security seriously. And then with a lot of companies, what we recommend is making it one of the facets of how you do procurement. So of course, price, of course, quality of work or capability to do the work is very important, but security is also an important part of the procurement process. So why did they focus on third party? Kind of touched on this already, but the SolarWinds, I think, and again, I can't speak for them, but the SolarWinds breach, of course, kind of shook up the security world and really the software world back in December of last year. And a lot of companies were affected by it, like over 18,000, a lot of those including US government, including governments all around the world were affected. And it sort of heightened the awareness around, of course, using third-party software. You need to make sure that the companies you're working with are taking security seriously. And not only are they hopefully identifying the security issues that they may face, but also engaging with their customers when something happens to ensure that there's a process to either move on from that vendor and keep your business operating, or put the proper sort of procedures in place to limit the exposure if there is an attack on one of your vendors. So I'm going to take a deep dive kind of into what was released in the most recent MAS 2021 and kind of some basic recommendations. And I tried to give kind of a free version of what your organization could do for each one of these. So one, I think one of the most important things that a lot of organizations don't have that is really important is just developing a third-party risk management program. Yeah, ultimately this is free. Of course, there is a time element to this. But most companies we work with actually don't even know who their third-party vendors are. So the first step in kind of creating this program is understanding who your third-party vendors are and keeping a list of it, right? Like making sure that if one of them is breached, like you can somehow figure that out. Hopefully they will tell you, but making sure you have a list of all the vendors you've worked with so that you will know if someone is breached, if you're affected. And that's really important to kind of understand like what you need to protect, as well as how your organization can respond if something happens. Include some sort of cybersecurity survey as part of your procurement process or onboarding for third-party vendors. I think that does two things. So one, it makes your organization understand that security is an important part of the selection process for you. But two, it also makes your vendors understand that it's an important part of the process of you selecting them. And I think that's kind of a twofold check that kind of enables your organization as well as that third-party vendor to think about security seriously and make sure that they're hopefully doing the right things to protect the information that you potentially are sharing with them. And in doing, I think, kind of having the survey as part of your procurement or onboarding process, it does help your vendors understand that security is important. And it also helps you sort of keep track of them, right? Because hopefully they've all filled out a form as part of that procurement process. You know who they are and what they do for security. Two, I think this is the cheapest and sort of probably also gives the most impact in any organization, which is just really creating a security culture. So I think, you know, Harangi is a security company, so kind of by default we have that culture. But as an organization, it's really important to make sure your employees understand that your organization can be a target. And of course, if you're regulated by MAS, you're probably storing something that's valuable to an outsider. So making sure employees kind of understand what that is, as well as how the threats could affect your business. I think that's a crucial thing. Ultimately, again, it's free outside of the time element. But if you can build that kind of culture, I think it helps your organization make better decisions going forward, right? And this is like one of the main pieces of advice that I give to all of our customers that don't have this kind of culture in place, is really just driving that from top down. And that's why I also think it's quite important that the board and executives at the company do understand that security is an important part of doing business these days. And it's not only a cost center. I think a lot of people and a lot of you know, senior executives that I talk to think of security that way. But really these days, you know, security is actually a sales and marketing enabler. So most large organizations that we work with as a SaaS product company require us to have certain levels of security in place. And we've won deals because our security is better than our competitors, right? And I think that's something that a lot of software companies, fintechs, even more traditional companies need to start thinking about as part of the procurement process. Because of course, MES CRM is now asking organizations to do this, but also, like any large company is probably already doing this. So really important to think about security, not only as a cost center, but also a marketing and sales enabler. I think on the sales side, of course, getting through procurement faster is hugely important. But on the marketing side, being able to talk to your customers, whether that's consumer or other businesses, about security and how you deal with security in your business is really helpful in terms of you know, becoming higher on that list of selection. Yeah, and I think in doing that, building that culture, your whole organization starts to think about security as part of their process in whatever part of the organization they're in. And it helps kind of solve a lot of problems on the ground that you, just by having your employees thinking about security as they make decisions. It also helps, like when a security incident or something happens, people take it much more seriously when it's something that's constantly talked about within the business. 3, this one's somewhat obvious, but security training for both employees and customers. This is the customer part is much more for B2C, but can be for B2B as well. I think this is obviously required by most regulatory requirements, MES CRM being one of them. But making sure that your training is, of course, not just something that people check through, but it's something that's relevant to your business and the types of risks your business face is really important. I also highly recommend giving that training to the board and senior executives. You know, Harangi does this for a lot of our larger customers, but we'll actually do an in-person training for the management folks, just because you know, having that interactive sort of experience kind of helps them understand more about the types of risks, what other companies are doing in the space, et cetera, to kind of help them internalize that. And of course, that also helps long-term when the company is making large decisions around security. Specifically, they understand the risks as well as the benefits of you know, potentially investing money into this. And for those of you guys that are engineering focused businesses, so fintechs, if your engineers understand that security is an important part of your process and important for your customers, they'll start to take things like using open source vetting, source code scanning, applying best practices in terms of like security architecture review, and utilizing DevSecOps will be a very important part of how they think about developing the product, which ultimately has a lot of long-term payoffs for the business in terms of efficiency, but also in terms of course, security. 4, basic stuff, which is all throughout MES CRM, but something that a lot of companies don't have in place, which is making sure you have logging as well as monitoring capabilities in place. So if you're in a traditional IT environment, making sure that logging is enabled on all of the machines that you utilize. And the reason this is important is because if something happens, you want to be able to identify like if anything was taken, or if something was taken, what exactly was taken. And the reason that's important is because when you do deal with regulators or customers post a breach, being able to identify specifically what was taken helps you kind of mitigate the risk going forward. Because if you can't identify what's taken, of course, you have to assume everything was taken, which is not a place that you want to be in if a situation like that were to happen to you. And I think more for the cloud native companies, making sure you have some type of software like what Harangi builds in Harangi Warden, which does look at the configuration changes you're making in your cloud environment, does look at the identities and access to the different resources in your cloud environment and infrastructure, as well as monitors it, and does do things like threat detection, which detects as nefarious sort of activity going on in your environment. Yep. And then the last piece, which I think is hugely important, which I cover in a couple of phases here, is developing an incident response management framework. And it's super simple. The easiest thing you can do is just do a tabletop exercise at least once a year. And what that means is basically working with the senior execs of your company to kind of pretend that you've been hacked. And essentially walking through what would you do if this happened, right? I think that's important not only to kind of practice the fire drill, so to say, which essentially is what it is, but also help people understand like what kind of things they could be dealing with in this situation, which is hugely important from a budgeting perspective, and also from like who they would actually be contacting in these situations to make sure this plan is written down. So if something does happen, people react quickly and know what to do. The other thing that I think is relatively cheap but not free is cyber insurance. I think this is super helpful, especially for companies that don't have a large budget around cybersecurity. Can help them kind of mitigate some of that downside risk of something happening, whether that's covering the incident response fees or covering the support you might need in dealing with regulators. It's a really reasonably priced thing that can help you through a difficult time. And then logging is still one of the most important things, in my opinion, just because it is going to help you identify and minimize risk, because you'll understand what was taken, if anything. Yep, and then a bit more about just like what people can do to respond effectively. I'll talk a bit about some of the things that, of course, Harangi does, but also what's important. So conducting regular security assessments. I think some of these things vary upon your business type, but the simple one is kind of penetration testing, which is just definitely an MAS CRM. And MAS recommends a CREST certified firm, which there are quite a few in Singapore, Harangi being one of them, but kind of helping you understand the security risks your organization face or your application or infrastructure, and helping you remediate any issues that are found. If you're using the cloud, dedicated cloud security is extremely important, because for all the companies that are utilizing it in a meaningful way, it is where the crown jewels of your data is kind of being stored. So making sure that you're looking at compliance, making sure that you're looking at monitoring, making sure you're giving the employees the correct access, or third-party vendors the correct access, to ensure that their security is there, because in the majority of the cases, most of your data is there. And then strategy-wise, kind of staying compliant with security frameworks, doing what you can internally by setting the right culture, doing tabletop exercises. But if you have the budget, going to work with third-party vendors to kind of help you through those process, and do things like tailored security policies for people. Yeah, just a bit about our product and what it helps companies do. So I think in regards to what I was talking about previously, Gartner kind of states 99% of the cloud security failures will be the customer's fault. They also say through 2023, 75% of the security failures will result from inadequate management of identities. So kind of what Harangi does is we have a cloud security compliance platform, which help companies kind of comply with MAS CRM in their cloud infrastructure, as well as cyber hygiene and the most recent 2021 release. We also do that with like RMIT, which is Malaysia's version of MAS, as well as OJK in Indonesia, and global standards. So you can quickly use the product to get an understanding of how your cloud infrastructure complies or doesn't comply. We also have CIM, which is called Identity and Entity Management. So helping organizations kind of understand who has access to what and whether they should have access to that, and giving recommendations on reducing that risk, as well as threat detection. And Harangi, of course, with SFA, gives everyone a free trial of the product, which includes a security overview, which is completely free. So if anyone's interested, you can always reach out to us. And that's it. Any questions?
Thanks for that, Paul. So, looking at the Q&A tab, it appears we've got a question. This is coming from Rajinder. He says, thank you, Paul. Not sure if you are going to cover this when I send this question. How can a digital platform service provider involving invoicing and collecting payments improve digital security? What are the current trends and new tech available?
Yeah, I mean, I'm assuming if you're like integrating with modern accounting platforms, you're probably using the cloud in some way. I think like when we work with organizations, the biggest risk that we see is, generally is the cloud infrastructure. Reason being is because most of the data is stored there, and that's kind of like why we built our products. So my background is I used to work for a US company called Palantir. Spent about 7 years there doing like cybersecurity and intelligence work. But then I became Grab's CISO before starting Harangi. Essentially, the reason I started the company because while I was at Grab, I was trying to work and find vendors that kind of understood the cybersecurity problem we were facing there, which we ultimately ended up building custom tools for, and saw the opportunity to kind of build a company around solving that problem. Because I believe for modern companies that are utilizing the cloud, the most important thing is securing and monitoring your cloud infrastructure. So I think if you're doing that correctly, you're by far better than most companies. And it's something you should invest in, which I think is not super expensive compared to the benefit you'll get from it. And once you do that, I think there's a lot of other things you can do in terms of like securing your APIs, doing penetration tests, and things like that to help secure the different infrastructure pieces that you have. But I think if you're kind of like monitoring your cloud infrastructure and understanding if things are going wrong quickly, you're in a much better place than most people, and also largely complying with most of the regulatory requirements in the MESTRM.
So Paul, I probably a question from me then, having heard what you've shared. I mean, so just to zoom in to be more specific for the audience who I believe are mostly running their businesses out of Singapore. What are some of the gaps that you've identified? Because obviously in Harangi's unique position, I'm guessing you've provided consultation services for a range of service providers from both traditional and the fintech side. What are some of the gaps that you've noticed that we all have to quickly address, and how should we go about it?
Yeah, I think the biggest thing and the most bang for the buck is the culture piece. So like making sure your employees kind of understand it's taken seriously. I think like it differs at every company. Sometimes the employees don't understand. Sometimes the leadership doesn't understand, depending on like the industry and the range. But I think like the culture thing and making sure people understand that, like, again, like I'm in security for a long time, like physical security and insurance, for example, has kind of been thought of as a cost center. But in reality, I think cybersecurity specifically is becoming much more of something that can enable your business. And I wrote an article about this recently called "Security as a Sales Enabler," because I truly believe that in the way we're going with the world and the way security is being treated by regulators, et cetera, the more seriously you take security, the better off you'll be when competing against your competitors, whether that's in B2B space or B2C. So truly believe that investing in security and talking about it with your customers is going to be an important part of success for the long term. And you'll see that happen. I think, as companies eventually, will be breached, how they communicate that with their customers, how prepared they are for that, is going to be an important part, and will be judged by, if you're, again, B2B, it'll be judged by the businesses you work with. B2C, it'll be judged by your end customers. I think if you do that well, then hopefully you can keep your customers and kind of encourage them that you're treating their information securely. If you don't, I think that is a downside. But ultimately, I believe that is a very important thing.
Cool. So we have a question here from Sherry Yap or Cherry Yap.
Okay.
Maybe I think she's inquiring about who are the insurance providers for IT. I don't know how much you can delve in there, but perhaps if there's a resource, either you can answer it directly, or if you have a resource you think where our listeners or our audience can go and check it out as well, that would be, I guess, something helpful.
Yeah, sure. So there's quite a few companies. Most of the major insurers. So if you already have insurance through a company, they likely provide cyber insurance already. There's smaller boutiques like Black Panda, who's specifically our partner, who does specifically cyber insurance, which is a great company to work with. But generally, I think if you already have an insurance provider, like there are plenty, almost all of the large insurance providers will provide you cyber insurance. But I think important to kind of look around and check with the smaller vendors too, to see who's going to support you best in this when something goes wrong. Because most of the insurance don't do indemnity, meaning they're not going to pay fines for you, but they will pay for the fees to get you out of the issue itself, which I think is an important thing to read when you are purchasing that insurance as well.
Cool. So just again, I guess we have perhaps time to maybe address one more question. I don't see any more from the floor, so I'm just gonna throw in a Hail Mary here.
Okay.
Yeah, it's no, it's with regards to, so for some of the guys on the call, it might be our first time sort of setting up a framework to manage technology risk. I mean, you've given a pretty high level summary of all the different areas we should look at, but
Yep.
if you had to give a framework or an approach, you could summarize it in a few minutes, what would it be, right? Because everyone's got a budget, and a bunch of us here are running startups. You know, we might not have a dedicated team specifically to that just yet. What would be the most bang for the buck approach that we can take this forward?
Yeah, I think the best thing is, like, I mean, if you're the founder or an executive at a company, is to sit around with the other executives and try to understand what someone could do to hurt your business, right? And then invest in that. And if you have that conversation, ultimately, I think it helps your organization also understand that piece. And it should be something that you talk to the organization about, right? So like let's say you're a fintech that has you know, lots of customers in the B2C space, right? Probably someone stealing your customers' data is going to be a really, or an algorithm that you use is going to be a really important piece that you'll want to protect. In general, like, again, why we focus on the cloud is because generally that's going to be in the cloud in some way or form, whether that's the customer's data or the IP. But just having that conversation within the senior executive of your business of what people could do to hurt your business, and then helping mitigate whatever you think that is, right? Because you're going to know your business better than any third party will ever. So ultimately, you'll understand what could happen that could hurt your business the worst, and then, you know, try to mitigate that as much as possible. And in doing that, I think also you've kind of set the security culture for your organization if you talk about it within the business, because they'll understand that you're thinking about it, and subsequently they will also think about it.
Okay, cool. Thanks so much, Paul. I don't think we've got any more questions for you. So yeah, so thanks so much for your time. Yeah, it's been awesome. So I guess we'll probably, yeah, we'll introduce the next presenter now.
All right. Thanks, everyone. Have a good evening.
Good evening. So next up is we have Miss Heather Tan. She's the Commercial Director of Compliant Advantage. Her topic will cover transaction monitoring, transforming AML mistakes into lessons for cross-border payments. And I believe she'll touch a little bit on the tech that can help us out as well. Go ahead, Heather.
Thanks, Ming Wang. I know that was a mouthful in terms of the topic, you know, we were going to be talking about today. Good afternoon, everyone. My name is Heather, and it's an absolute pleasure to be speaking to you here today. For those of you who are still with us, thanks for sticking around. I know in a few minutes, our Prime Minister is about to do a live broadcast, and I would have personally been very tempted to tune in myself. So thanks for being here. Compliant Advantage is a UK-based RegTech with Singapore operating as its APAC headquarters. We've raised over $108 million over the past 7 years to fuel innovation in AML screening and transaction monitoring. And I personally spent close to a decade working within the AML technology space, helping financial institutions, a lot of fintechs and payment companies in Singapore to reinvent and build their risk and compliance processes. And I'm excited to be here today to share our observations, common AML mistakes, and how we can avoid them when we're looking to build a scalable transaction monitoring solution. So today's session is going to be dedicated to helping those of you who are looking to develop your transaction monitoring processes or finding ways to enhance your current one, but I'm not sure of how to start. Or maybe you've got one and you're not sure if it's, you know, regulatory compliant, and you want to look for ways in which you can improve your overall business efficiencies. And I think most importantly, as Alvinda shared earlier, to put in place a transaction monitoring solution that is agile enough to help you through reg change management. So in the next 20 minutes or so, our goal is to be able to provide you with an actionable plan, to highlight a few pitfalls and challenges and guide you through a framework of how you can actually get started. I want to share a bit of a personal experience. So a few years ago, when I was preparing for a trip to Georgia along the borders of Russia, the only payment method accepted by my tour operator was a Western Union transfer. So I found myself having to locate a street-side Western Union counter while I was holidaying in Bali, standing in line and filling out a remittance form with my passport in hand. And I think this is probably an experience that a lot of you may share. Over the last few years, the global remittance industry has transformed by innovative technologies, facilitating faster, more flexible payment products and better experiences for customers. The annual amount of cross-border payments is estimated to be close to $7 billion and expected to continue growing at a rate of 11.75% each year, making up 20% of global e-commerce sales. The COVID-19 pandemic has also been a catalyst for this growth. It's estimated that the growth in the past 1 year is equivalent to the past 10 years combined, especially around the e-commerce space. So this rapid growth and demand for real-time transactions has also paved the way for heightened risk for yourselves and consumers. Some of the new methodologies, around money laundering, fraud, and terrorist financing make it more challenging for cross-border payment companies to actually detect suspicious transactions. Research actually shows that the losses from fraud alone, in the payment space amounted to about 32 billion just last year. And this figure is expected to continue to rise, which is why globally regulators like the MAS have released new guidelines and licensing requirements for the payment industry. So what are the main objectives for transaction monitoring? I think firstly, it's to remain compliant with financial regulations. Secondly, to detect behaviors that indicate, financial crime in the transactions you process. And thirdly, to protect your client base and your business. In order to achieve these objectives, financial institutions need to navigate the challenges and risks involved in transaction monitoring. Cross-border payments especially is an attractive target for criminals due to a variety of reasons. And it's important for compliance teams to understand the risks involved, which includes, firstly, the lack of identity information. And this is especially true in the digital remittance space or prepaid cards products, where funds can be loaded anonymously online and withdrawn through an open loop. The second being legislative updates, which requires transaction monitoring requirements to change very often. So the case for companies operating in multiple jurisdictions, we see that being very evident, having to stay on top of all the different regulatory updates and requirements. If you look at Singapore in particular, in the past 1 to 2 years, a lot of us here have been navigating the new Payment Services Act. In the Philippines, the scope of AML and CFT laws have expanded, and in the EU, companies are now actually just days away from having to comply with the 6 AMLD's June deadline. Money launderers are also actually, using this discrepancy to evade monitoring controls. So if we look at Singapore versus Malaysia, for example, the CDD and KYC requirements already differ. And globally, regulators also adopt different reporting thresholds. So the differences in regulatory environments actually create a very good environment for a lot of the money launderers to look for ways to circumvent the system. The fourth point that I want to come to, and this is one that all businesses will struggle with to a certain extent, is false positives. So the complexity and the scope of the kind of information you manage during the transaction monitoring process often leads to a high amount of false positive alerts. And these can slow down your business, the compliance processes, and add overheads because they need to actually be remediated carefully. And it can also create a negative customer experience whereby payments can be delayed. In the current, pandemic that we operate in, new typologies and risks are also evolving. And so some examples around that is an increase in money mill crimes. If we look at the current unemployment rate, as well as a lot of teens being homeschooled, the criminals have actually taken advantage of that to, look for ways to engage with them in offering quick cash or employment in exchange for their identity and bank information. On top of that, we're also seeing that businesses are impacted by the pandemic, and those who have to look for new ways to streamline their workforce, and oftentimes compliance or operations personnel end up actually wearing multiple hats, and this can also impact the quality of their AML processes. So if you're in the business of, actually relying on your network partners to manage some of the CDD processes, that already exposes you to risks. So when companies actually fail to navigate these challenges, it can result in a failure to detect financial crime behaviors in your client activities and put a strain on operations and even impact team morale when, for example, we've got too much false positives to get through. The consequences of having an ineffective transaction monitoring solution can eventually lead to enforcement action, fines, and reputational damage. In Singapore alone, $69 million of suspicious transactions have been intercepted by the authorities since 2019. So I just want to spend a little moment here talking about a real life scenario, and hopefully this helps you to relate to how this can actually impact your business. You may have seen in the news in 2020 that Westpac was fined a record of $1.26 billion for multiple AML lapses in the LightPay international remittance service. The first being failure to properly assess and monitor risks associated with transfers by the LightPay service. So the investigations actually showed that 262 Westpac customers exhibited telltale signs of engaging in overseas child exploitation in the Philippines, other parts of Southeast Asia, and Mexico. And this came in the form of frequent small value transfers, followed by travels to the same destination, which should have been detected by Westpac. The second is also their failure to report over 19 million instructions to the regulatory authorities. So unfortunately, in this and many other instances, the human effect in failing to detect and report suspicious transactions earlier is that innocent children are being subject to entirely preventable sexual and physical trauma. In this case, particularly, over 3,000 transactions translates to over 3,000 occasions of such activities. So shortly after Austrac had launched their investigations, the board actually announced immediate fixes, which included, shutting down the entire LightPay transfer system, reviewing and remediating all unreported international transfer instructions, and conducting a look-back screening of their customer transactions to look for potential cases of child exploitation transaction types to the Philippines, other destinations over the past 12 months. So what can we actually learn from this experience and hopefully prevent this? According to the federal government's Department of Home Affairs in Australia, companies should set up and maintain adequate systems to monitor for money laundering and terrorist financing risks, to know your customers by verifying their identities, to report and any kind of suspicious transactions to the regulator within specific time periods, and keep appropriate records of your transactions. And why must you actually build a regulatory compliant transaction monitoring system that can actually protect you, your business, and your customers? And then how can you go about doing that? The World Bank's advice is for financial institutions to adopt a risk-based AML and CFT approach in your policies and procedures that remain proportionate to your own business risk. So this can involve looking at the size, complexity of your product, customer types, and these policies, include assessing and understanding AML and CFT risks, allowing mechanisms for identification of your customers, setting limits on loading values, ensuring adequate amount of controls and monitorings, and for regulators to actually improve the provisioning. And this is, an example of what a framework would look like for you to develop a successful transaction monitoring system. We've shortlisted 5 key things that form this framework, and it should protect you in terms of being regulatory compliant, operationally effective, and agile enough to scale with your business. The transaction monitoring process relies a lot on information about customers that companies need to acquire during the customer onboarding and KYC processes. Fortunately for you guys, you've got 2 wonderful speakers after this who will be able to touch on that topic. The process must involve accurately verifying your customer identities at the onboarding phase and throughout the business relationship in order to create effective risk profiles. It should also establish a customer's expected transactional behaviors, looking at the kind of thresholds and counterparties. And in terms of the second point that we want to come to, and this is one that a lot of companies we work with don't realize, it's the effectiveness of a transaction monitoring solution depending very, very heavily on the data that you're able to capture. So the success rate that you have, and often what we see is there's a disconnect between compliance, the data and technology teams. And to create a very successful transaction monitoring process, you need all of the teams to work aligned and share a common goal and understanding in terms of the data set required to create a successful system. Since the primary focus of an AML program is to detect money laundering, the data coverage and regulatory compliance should be the primary focus, and that should help you to manage your overheads in terms of how much resources you want to allocate to enrich that data and collect that information and analyze these throughout the customer life cycle. So these can include customer risk data, counterparty information, transaction details, historic data to accurately spot any kind of potential money laundering activities in their current and past transactions. It's also important to use this data to refine how rules are being applied based on analyzing your product and customer data by peer groups. The third point here is, looking at rules that can help you to drive your transaction monitoring solution. This forms the foundation, and one of the most common mistakes we see companies make is thinking that the more rules they have, the better protected they are. A lot of the companies we work with do come to us and say, can you and your system provide a checklist of all red flag indicators that have been stated by the regulatory bodies as a form of checklist rather than as a guidance. And they actually end up being overwhelmed by having too many rules, not knowing where to start. So how do you actually go about determining the right set of rules for your business? You should actually first look at preparing a base set of rules, such as your payment limits, your velocity, structuring, historical activities, geographies, peer groups, and then deciding which ones are relevant to your business. You can then tailor this by applying the risk associated with the products and the different intermediaries and different market segments that you offer to the nature of customers that you work with. It's important to also test the effectiveness of the rules by taking one rule at a time and loading that data back into the system. And then testing if the results that come back are manageable for the team on a day-to-day operational basis. One of the pitfalls that we mentioned earlier was, having too much false positives. And to actually mitigate this, it's important to actually set good thresholds. So false positives actually constitute a significant portion of the alerts generated in the AML transaction monitoring and screening process. It's estimated that the amount of false positives account for about 42% of the overall alerts and can cost financial institutions globally over $3 billion. So if your thresholds are too wide, they can result in a high number of false positives, creating a backlog of tedious work for your compliance officers, while setting them too low can lead to failure to detect genuine criminal activity. But so many companies actually struggle to find a sweet spot, right? So a good way to start is by segmenting your customers into different risk groups. For example, by the value of their transactions, their product types, their geographies, allowing you to apply transaction monitoring thresholds that are appropriate to each of those segments, as opposed to applying a one-size-fits-all. Before the thresholds are implemented, you should also perform a dry run of your AML scenarios and just test the alerts and fine tune the sensitivity of the system before you actually, go live with this. Along with that, you should consider, an implementation and user acceptance testing. And then finally, to also look at how we can create an operationally sound and effective system, you want to look at a solution that can support the workflow requirements of the entire transaction monitoring review process. Things like a clear escalation process where there can be a maker, a checker, multiple points of escalation within the organization, as well as a full audit trail. And the very last step here, to actually achieve a scalable transaction monitoring platform is setting up a system that supports your growth plans. And it's important to keep the following considerations in mind. The first being, how can you ensure that the investment that you've put into creating a transaction monitoring system can be agile enough to adapt to new regulatory requirements, to protect your business from new money laundering typologies, to also grow with you as you introduce new businesses, new products, and enter new geographies, right? We're often told that, and internally, if you were to do this, it can take an IT team up to 6 weeks to deploy a new rule, including testing. And how can you then ensure that your system is also continuously maintained through business, periodic reviews in terms of the rules, thresholds, data quality? So having a system that is agile is going to be very, very important in your success. And in summary, we hope that you've actually found the system and the framework useful. And I think there are just a few things that we want to think about here. The first is, finding and maintaining the balance between operational costs and the extent of your transaction monitoring efforts, tailoring your solution to be specific to your own use case, as opposed to doing this as a check the box exercise, and having the right kind of data to drive your entire transaction monitoring process and the rule set. And finally, implementing an effective transaction monitoring solution that keeps you up to date, with your business needs. So with that, I know there's been a couple of questions here.
Thanks, Heather. There are a couple of questions actually from Rajinder as well. I don't know if you want to address you can see it, right, Heather?
I can see the questions here, and yeah, we've actually come to the end of our presentation, so happy to be taking questions here.
I see. I don't know if you want to start with the second question first, just to get that out of the way, and then we can deep dive. I think it's just a question about what does FT or TF stand for when you talk about ML/FT.
Sure, absolutely. So in this case, FT stands for financing terrorism. TF is terrorist financing. So apologies, I shouldn't have been using a lot of acronyms. But F basically is financial and T is terrorism, and ML would be money laundering.
Great. So Rajinder, again, his first question was pertaining to the payment gateway providers. He puts here through mobile apps and progressive web app currently in Asia. Are they up to the mark in terms of their transaction security in terms of cross-border payments in Asia?
So we really see a mixed bag, and I think this ties in with what Alvinder, was presenting in terms of the stats around our adoption of technology in this space. We do work with companies who are ahead of the curve and have deployed processes. This can be a combination of in-house transaction monitoring solutions as well as ones that are adopted by vendors in the industry. We do also see then sort of the mid-tier where likewise they've adopted something. It may not have been as robust or have built something in-house. Where we tend to see people struggle with in-house solutions are that the in-house solutions can have a fixed set of rules. They may have some data, but they don't actually have an escalation tool where you can actually provide, a review process that clearly moves and escalates the transaction alerts through multiple parties in a team. And then we're also seeing a lot of companies who are using Excel spreadsheets to currently manually manage this process. Oftentimes, I think how successful or not that these different processes comes down to the volume of transactions a company needs to manage. So if it's high volume, then an automated tool, in-house or external, would be probably the best way to manage it, as opposed to manually reviewing this, which can then create say human errors and things being missed out on.
Okay. We also have one more question here. For countries that have less stringent technology risk management regulatory requirements, trying to get it here. How, in your position as commercial director, do you convince companies in regions like Malaysia or UK to invest in a TRM system, especially in the current climate?
Yeah. Sure. That's an interesting one. I suppose it's, it's partly commercial. There's definitely, in a lot of the conversations we have with companies, you will need to create a business case as to why the company should be investing in something that may be perceived as being able to get taken care of by teams, manually, right? Then it is looking at the cost of the human intervention, not just in the day-to-day operations, but in the long-term protection of the business and making sure that nothing falls through the cracks, and weighing that against the cost of actually deploying a solution. We have spoken to companies in Singapore, Malaysia, and the UK who have definitely been hit, during this time, especially. A lot of the ones who are or were operating in the brick and mortar kind of space, but are now looking to digitalize. And I mean, the goal is, and I think fundamentally it is a decision on the company to see if they want to invest enough to keep up with times, or simply just put an end to the business, or ride it out and kind of see where the next year or so takes them post-pandemic, right? And our goal is always to be here to support, businesses in whichever decision they choose to take for their own operations.
Well, another question we have is quite interesting. It says, hi, Heather, can you share for businesses in the remittance of payment services space, is it essential to identify the third party in a transaction, meaning the beneficiary or receiving party of a transaction? And if it's a requirement, what are the effective ways that you recommend in identifying the beneficiary and tracing the source of the transaction? It's quite a bit.
It's a multi-part question, and we'll do our best to answer it. So I think when we look at whether it's essential to identify third parties in the transaction process, it also depends on the nature of the business. So earlier when we talked about using rules and deciding how much overheads to invest in this process, it really comes down to understanding your own business and your risk exposure. For example, if you were a payment company who are working with merchants, and the merchants that you work with, then, or they might be a merchant platform, and then they have a lot of other merchants on that platform, right? And it's a B2C, it's then a B2C. So let's take Shopee, for example, something that we're all familiar with. In that instance, if then I'm also an end customer of Shopee, right? But Shopee also deals with other merchants, and then there's Shopee, and then there's us. In that scenario, you can screen the end recipient, but you may not have that transaction data if Shopee doesn't give you, my details as the end consumer, right? So in those scenarios, you will probably then stop the third party or the CDD screening just between the merchants that you're dealing with, as opposed to the end customers. We're looking also at things like, aside from the availability of information, looking at whether or not the volumes are sustainable as well, right? So there is no right or wrong answer, but it's important to just understand between your resources, the risks involved in the nature of those transactions, plus the data availability, whether or not that makes sense to your business. In terms of looking at the beneficiary or receiving party of a transaction, then again, it would be important often to see how frequent and the nature of funds that they're receiving. For example, if you're a payment company that is working with a beneficiary on a scheduled payment model, so every month you're helping them to release payments, then it would probably be a little easier to do that beneficiary screening upfront, because a fixed set of counterparties that your customers are going to be dealing with, as opposed to if it was on a purely transactional basis, they can send funds to multiple parties. In that scenario, yes, the answer is you should still also do those checks, but you may not need to do those checks on a periodic basis. You can do those checks on a transactional basis, right? So I would say that regulatory requirements the guidelines do suggest that you do screen all parties involved, but how frequently you screen it, to what extent, how much details you want to screen them against, sanctions information only, sanctions plus PP plus adverse media, politically exposed persons, and adverse media information, and that's entirely up to your own risk-based approach.
Okay, I think, Heather, we've got time for one more question, so I'm just going to add to the basket, right? You talked about transaction monitoring being dependent on the available data points, right? And we're all here very interested in knowing how we can do so effectively and scalable, right? In a scalable fashion. So how can we leverage, let's say, CRM systems to get the most out of our transaction monitoring software or solutions?
Yeah, sure. So CRM systems are very useful, but the effectiveness of a CRM system also depends on how much information you collect. One CRM system from one to the other can also be quite different. The basic kinds of information that a company should collect for creating a foundation for a successful transaction monitoring system should include, customer information, the beneficiary information, transaction dates and times, transaction values. And you should also be able to store this information. In the Westpac example we gave earlier, often in an investigation, you want to have a look back period to look at their historical activities. But to go beyond that, and these are sometimes things that may or may not be able to get taken care of in the CRM by a CRM system, is understanding a customer's transaction behaviors, right? So it can then take the form of, an interview or questionnaire where you're finding out the frequency in which your customer is expected to transact. It's also then looking at what kind of counterparties they're going to be transacting with, what type of geographies. So that type of deeper dive, may or may not come through a CRM system, and it's entirely dependent on how you engage with customers during that onboarding phase.
Okay, that's really helpful. So thank you so much for your time, Heather, and that very insightful presentation.
Thanks for having me. And I suppose just, before I go, I wanted to just share this with everyone. If you'd like to find out, based on today's session, how ready you are, our team has actually built a very informative Catch Them If You Can game. So you can use this link here, complyadvantage.com, Catch Them If You Can game. And it actually also gives you very useful answers. If you've gotten an answer wrong, then it does prompt you to think about whether or not you've got the right understanding of the type of behaviors you should be tracking. And if you've got any questions at all, then feel free to reach out to us. We'd be more than happy to discuss how we can help you in your AML screening or transaction monitoring journey. Thank you.
Thanks so much, Heather. We were actually planning on having the game potentially for the audience, but I think the decision was to give everyone a chance to deep dive into Heather's presentation. So perhaps you guys can check out the link after. The next speaker we do have is Mr. Manu Chada. He's the CEO of Merlin.ai. The topic he'll be speaking about is how advancements in NLP and artificial intelligence are enabling hyper-automation in risk screening, helping achieve a more holistic risk-based approach to compliance. The floor is yours, Manu.
Thank you, Mingwan. Can you confirm you can see my slides, please?
We can.
Excellent. Thanks so much. I also wanted to thank Heather for an excellent presentation. I think this gives us a good segue into sort of a deeper dive topic. So good afternoon, everybody. My name is Manu Chada. I'm CEO at Merlin.ai. We are a RegTech firm based out of the Bay Area in California. I'm going to talk to you about how we are hyper-automating adverse media screening to help achieve a more holistic risk-based approach to compliance. I thought I'd kick off the session today with just a reminder of why all of us who work in RegTech do what we do, and those of you that work in helping fight financial crime do what you do. Unfortunately, some of the worst atrocities in the world are funded from very large proceeds of money laundering, and these of course come at significant cost to people, communities, the environment, and entire economies. There were some examples Heather showed about this particular use case. We see this happen just way too much. I was blown away when I saw the stats on just how big a criminal enterprise sexual exploitation of children was. So anything we can do to really fight this fight is worth fighting. It's a fight that financial institutions continue to struggle with. I pulled some stats for us to take a quick look at. There are three things that stand out when you look at the data just over the last many years. Clearly, massive regulatory fines going all the way back to 2008. You can see close to $47 billion of fines, and just in the last year alone, $10.4 billion of fines. And Asia Pacific was the most fined region. So you can see even within Asia Pacific, this is a very large problem. The other thing we've seen that's changed quite significantly just in the last year or two is that individuals are now being held personally liable for AML compliance lapses. And this is a change from how it used to be before, where an organization would get fined, but the individuals would not be held responsible. Just last year alone, there were over 200 fines on individuals, reduction in pay for key executives, and so on. And perhaps the third and most significant is, even beyond the fines, is that organizations see a large amount of reputational damage, big hits to the valuation of their companies. Key executives are losing their jobs. And it's because this is such a serious problem and needs to be taken so seriously. We see these types of effects, within the marketplace. Now, understanding risk is obviously critical to AML compliance. I suspect everybody in the audience is quite familiar, so I want to keep this very, very brief and high level. There are different types of screening techniques that we go through in order to look for these types of issues. There's sanction screening. There's only about 29,000 people in the world, people and businesses in the world that are on sanctions lists. It's of course illegal to do business of any kind with somebody who's sanctioned. And there's processes and programs in place to prevent that. We also know that politically exposed persons may or may not be involved in financial crime, but they're certainly susceptible to bribery and corruption, and so you have to really pay attention. What most people don't realize is that these two types of screening, generally speaking, will only identify less than 1% of risk related to individuals and businesses. The rest of it has to be surfaced through really adverse media screening. So what is adverse media screening? It's quite simple. It's really identifying the risk related to people and businesses based on their news footprint, stories that get written about the things that they've been involved in. And of course, Heather talked very eloquently about transaction monitoring. Transaction screening is fairly similar, perhaps with a slight difference of actually trying to understand the people involved in the transaction and the risk that they may represent. So just going one level lower into adverse media screening, and on the surface, this is quite simple. This has been in place for quite some time. It is required by regulation. There is no substitute for this process. Adverse media screening is initially conducted when onboarding a new client as part of KYC, and then periodically every 1, 3, or 5 years, depending on whether the client is deemed to be a high, medium, or low risk, as part of periodic CDD or customer due diligence. What is changing quite rapidly is that regulators are expecting timely action on newly emerging risk. Sanctions, for example, have to be looked at every single day. You have to do sanction screening every single day. We're starting to see the same type of emphasis and focus on adverse media screening so that institutions can be aware of newly developing risk as soon as it starts to emerge in the public domain. Some banks are actually being pushed by regulators to take action within 24 hours of the first article being published. So what are the challenges with adverse media screening? Well, first of all, just the amount of news being generated is staggering. According to our research, in the first 20 years of the 2000s, there were 5 billion articles published. Well, we are on track to ingest about 5 billion articles, just shy of 5 billion articles just in this year alone. This is about a 3 million article per day ingest run rate. That many new articles are being written. And so, if your job is to read news to understand risk, this makes things kind of complicated. The other thing that's really critical for effective adverse media screening is it's important to have access not just to the sort of more publicized individuals and risk events that happen globally or nationally, but often the difference is, do you have access to risk that is described at a local level? So, news that may not have been picked up nationally, but has been written about, perhaps in local publications. So it's very important to have access to the right data sources here. It doesn't matter how good the solution is, or if you're using AI, if you don't have access to the right data, you won't be successful in catching all of this risk. The other problem with adverse media screening is you don't really know what you're looking for. You have, client information, you have a name, a date of birth, an address, things like that. But you don't know what they're involved in. So you have to cast a really wide net. You have to do a very wide search. And this means you're going to get back a very large number of false positives. And so it's not surprising that investigations can take many, many hours. You could have hundreds, sometimes way more than hundreds of articles coming back. Humans reading these articles to understand the risk, is a very tedious, slow, and error-prone process, and simply does not scale. So if you have, if you're onboarding a large number of clients, or you have a large install base and you need to do monitoring of these clients on an ongoing basis, it's quite challenging to be able to do this. The other big challenge with adverse media screening has to do with getting a timely understanding of risk. So I thought I'd take a real world example for you. So here you have Scott Lane. I mean, this guy was executive director at a university here in the US, considered low risk by any means. Well, unfortunately, in April of 2016, news broke about him being involved in some things. And then it took 5 years to actually sentence, and he was sentenced for 35 years for sexual exploitation of a child. And so the question comes up, when did Lane's bank actually become aware of his risk? And because he was probably deemed a low risk client, the bank's policy probably was to screen him every 5 years. And so depending on when he onboarded, that 5 years could have resulted in the bank not being aware of the risk related to Scott Lane for many, many years. And then of course, with his transactions and so on. And then the other question that regulators are now asking is, when does the bank actually take action? Do they need to terminate the service? When do they terminate the service and so on? So, it's not just important to do a deep search, but it's also really important to have timely access to risk as it starts to emerge. So in this area, ongoing monitoring is an absolute game changer. This is a paradigm shift. Rather than analysts coming in and running searches and getting back articles and reading articles, here the system is essentially doing that on your behalf in a fully automated fashion. The system generates alerts when it detects any new risk that's emerging for any of the bank's clients, any of the institution's clients. And this, of course, saves a ton of time and effort on behalf of analysts who no longer have to come in and go through the tedium of the workflow, if you will. The other thing that we believe will change over time is that as these systems get better, as ongoing monitoring becomes practical at scale, both from an effort and a cost perspective, we think it will eliminate the need to segregate your clients into high, medium, and low risk. As I showed you in the previous example, Scott Lane was a low risk client. Screening him every 5 years, or even if you go to ongoing and screening him every 6 months, is not going to be sufficient given the types of changes that regulators are asking for. So if you look at the key requirements for ongoing monitoring to be practical, first of all, we believe that this needs to be unified across both onboarding and ongoing monitoring. So you need one seamless solution versus multiple solutions. And then it's very important that the alerts that are generated are just relevant for the institution's risk appetite. And of course, you have to take care of all sorts of false positives, because otherwise you're going to end up with an unmanageable amount of unremediated alerts. You'll have a backlog, and pretty soon, even though you have an ongoing monitoring system, you won't practically be monitoring on an ongoing basis because your team will be behind. And this is really why this process periodic screening is done today, because of this challenge. So to really solve this, solutions have to be able to offer those types of capabilities. And this is something that will need to be done at scale for tens of millions. Some of the larger banks in the world have hundreds of millions of clients. So a system that can scale to that level, both from a amount of effort and a cost perspective, we think are really, really critical. And this is a change that's coming. We already see some of the largest banks in the world being pushed very heavily by their regulators to move from periodic screening to automated ongoing monitoring. And certainly when we talk to our clients, many of the leading institutions are already initiating projects to look at how they can modernize their screening platform, very much tied to what Alvinder was talking about earlier in this session. So the term hyperautomation, when we first saw this term come out from Gartner last year, it sounded like, well, just sort of uber automated. And I guess it is uber automated, but there's a little bit more to it. And the idea essentially is that, the use of technology like RPA, AI, NLP to augment a human being and replace many of the steps that the human would need to do to free them up to focus on sort of more high value decisioning is something that is their top trend, and we can see why. So if you apply hyperautomation to adverse media screening, the process of adverse media screening is actually, is not that hard to understand. There's news that's generated. The news, obviously, you have to look back. So you have to look back 10 years or 20 years. So there's a news library, and then there's daily articles being added to the system. using AI to understand every single article to figure out what's relevant and not relevant from a financial crime and a predicate offense perspective, weeding out the false positives, and then actually doing what the analyst does manually today, which is to start grouping the related articles together, extracting out the risk, classifying the risk so you understand which type of predicate offenses and how it maps to your risk appetite as an organization, and then pulling out secondary identifier information to be able to find the person you're looking for through the screening, generating what we call a risk finding so that the analyst is not functioning at an article level, but is actually operating at a risk level. So the use of AI to generate these findings allows analysts to just understand the risk without needing to read articles. And we think that's really the type of automation that is needed, and that's what hyper-automation of adverse media screening provides. So if you just take a deeper look at this, here on the right, you can see what a finding looks like in our system. It's a representation of the risk involved with this person. I use the same example of Scott Lane. All of this information is summarized and put together for the analyst to take a look at without needing to essentially read through articles. AI measures the type of risk, the amount of risk. It actually does the classification of risk, and makes this much simpler for the analyst. Essentially, the analyst is focusing on decisioning, so they would read the finding. If they could make a decision based on information presented, they would remediate the finding. If more information is required, they can click on the articles feeding the finding, very quickly scan through them, and come to a conclusion. All of the case documentation needed for the analyst to make this a process that's defensible in an audit is generated for them. So really, the analyst is focusing on decisioning more than any other part of this process. Now, if you want to apply this idea to real-time ongoing monitoring, it's even more critical, because if you're going to monitor in real time, large number of clients, then you need a very fast way to remediate risk and operate at the level of risk rather than the level of an article. And that's what makes this practical without getting into a backlog. But these systems then have to deal with they have to deal with remediations that have already happened. Now, risk in the real world is written about over a series of articles over weeks or months. If on day one or day two, an analyst were to remediate a risk finding as relevant, or if they were to dismiss it, and 3 days later and 6 days later and a week after that, there were new articles, you don't want to keep generating alerts unless there's something in there that's appropriate for the analyst to take a look at. So these systems have to get sophisticated, and AI is really the only way to do this. And lastly, we believe in order to do this effectively across any type of organization, whether it's a large financial institution or a mid-sized bank or a consulting firm or a fintech, this has to be deployable at scale, at price points that are compelling. Arvinder mentioned earlier this in the session that there are different grants for AI because AI is very expensive. We believe it's important to democratize this type of hyper automation. And so whether you're one user or you're 1,000 users using our solution, it's affordable, and you have all of these benefits for yourself. So just in summary then, obviously adverse media is absolutely critical for developing an understanding of risk related to people and businesses based on their news footprint, and critical for timely AML. Scott Lane was not sanctioned. He was not a PEP. There was no other way to find this risk about him. And periodically screening Scott Lane was not sufficient because the bank would have remained unaware of his risk for many, many years. And in order to make ongoing monitoring practical, you do need technologies like hyperautomation using AI and NLP to make this realistic at price points that work for people. So that's about it. I'm happy to take any questions.
Thank you so much, Manu. There doesn't appear to be any open questions from the floor right now. But I guess one question off the top from me would be, as an earlier stage company where I suppose that risk can appear, and we might not have huge volumes in terms of transactions. How meaningful would it be to deploy something that is based off an AI system? Because the AI is learning off, obviously, the more data, then the more meaningful it is.
Right, it's an excellent question, Ming Wang. So in this case, our system learns on data, basically news information. Our library is one of the largest adverse media libraries in the world. We have access to 4.5 billion articles, with 3 million coming in every single day. So whether you're using this to screen 100 clients or 100 million clients, you're still going to get the benefit of all of that data that our system is processing and also has been trained to process. It really depends on what business you're in. There are so many use cases that go well beyond sort of typical AML in financial institutions. You could be a university and you want to screen your donor to prevent sort of reputational risk of accepting money from perhaps a donor that may not have a clean track record. You could be an organization that's looking at supply chain risk and trying to understand your suppliers, and maybe there's reports breaking out that they're conducting business using child labor in another country. There's so much happening in the world and so much data that it is not possible to manually keep track of this. And the nature of adverse media is such that you have to cast that wide net. So our belief is, this is why it's so important to make this economical at any size, whether if you want to screen 100 clients or 100 million clients, you should be able to do it without having to do all of this manually.
Okay. So we do have a couple of questions. One seems to have come through the panelist chat. I recognize the name. It's actually one of the audience. Based on the ongoing monitoring model, would that mean there will be two processes happening? One would be the ongoing monitoring screening, and two, re-KYC clients on the same periodic basis to refresh their ID and V? Or would it mean just using ongoing monitoring and refreshing the documents as and when needed?
So I'll try and answer it best I can based on my understanding of the question. So identity verification is, of course, the process you go through first to verify, the client is who they say they are. Risk screening comes in as the next step to understand what risk does that client represent. And as I mentioned, the risk screening is done initially when you onboard, and then once you onboard it on a continuous, right now it's periodic, and we believe this is shifting to a continuous basis. It's very important to have one screening solution for both onboarding and continuous monitoring, because the continuum of risk for that client is something you want to be able to see. There may be things this client has done in the past, perhaps 5-10 years ago, that by themselves aren't sufficient risk for you to deny them services, but some new things they might do in aggregate with their previous history may be sufficient for you to push them over the line and say, this is not somebody we want to associate with and do business with. So you really don't want to have multiple systems. And in financial, in any institution, single view of the customer is so important. You don't want to break the paradigm of single view of customer even for screening.
Thanks, Manu. We have another question here. Hi, Manu, is your solution? Maybe you might want to, it's a bit of promotion for Merlin now. Hi, Manu, is your solution listed under the MAS RegTech or DAG grant? Did a quick search, didn't see it listed.
No, it's not listed yet, but my team is looking at doing that. So yeah, if you're interested, please reach out to me directly. I can get you more information as well. And you can bet we'll be calling Alvinder to get listed.
I was going to say, after this question, Manu, you'll be hastily trying to get your team on board as quick as possible. We have one more from Rajinder as well. He says, thank you, Manu. I learned Oh no, actually, he's just thanking you. He just said he's learned new knowledge from you today, hyperautomation, importance of adverse media screening.
My pleasure. I'm glad it was useful.
Okay, I'm just going to give it another minute. Do we have any other questions for Manu? Because it was quite comprehensive and definitely very forward-looking from the implementation space as well. Maybe on that topic, I'll throw that in, Manu. So as a company who's heard what you said and say we're interested, and we're saying, okay, what would be the first 100 days of implementing it or getting ourselves ready for, an AI-powered smart system like yours?
Yeah, so the joke within the company is we run on Merlon time. 100 days is just way too long. We have a free trial, so anyone is welcome to use this. Just go to merlon.ai, click on the start free trial. There's a tutorial, it'll walk you through it. It's a fully functioning trial. You'll get a sense of how hyperautomation allows you to basically do adverse media screening without having to dive into the article level like I described. I've been in software for 30 years, and this is something that is changing very rapidly. Nobody wants to spend months doing a POC and then making multi-million-dollar decisions. People want to very quickly understand, is there value? Is this thing actually going to help me solve a problem? So we're actually the only reg tech that we know of, certainly in adverse media, that has put the trial online. Basically, it's a fully functional free trial. We believe that the benefits of the solution are more than evident when you use it for yourself. If you're somebody that's been doing adverse media screening or you're new to it, it's very, very simple to learn. If you're fortunate to win someone's business, you can deploy this within a couple of days. It's just a question of allocating accounts to your users, creating your profiles, for your risk appetite. All of the data is bundled in, unlike other vendors where you have to go out and spend millions of dollars buying large data subscriptions. We've kept it very simple. It's all bundled into your product. Of course, if you have your own data subscription already, you can plug that in, of course. But we wanted to make this very simple to implement, very simple to use, and as fast as possible, get the value out of it.
We have a question from Krishna. He's asked, can you share the extent, I guess, the status of your conversations with MES and their take on the approach, please?
So we've been in discussions with MES. We met with them late last year on a related project, so they're aware of the company. We will, of course, be working very closely with them, on this grant. Merlon POCs are very fast and very inexpensive. So, folks on the call, if you're interested, it should be quite straightforward to do this. I don't have anything additional to share at this point in terms of with MAS, but this will be coming soon. And you can reach out to me if you have questions. I'm just manu@merlon.ai. Happy to address any questions or help you with a trial or anything else I can help with.
Cool. Thanks so much, Manu. So I guess there aren't any more questions. I think it's one of those topics where we'll let it sit with us for a bit, and if we have more, I think we'll definitely reach out, including myself and my team as well, possibly. So thanks so much, Manu, for your time. Thank you, Mingwan. Thank you all. Bye-bye. Bye. So next is I'd like to welcome Ms. Urvashi Gupta. She's the Southeast Asian Regional Manager for Onfido. Onfido, I suppose Urvashi can give a better introduction, but they're experts when it comes to eKYC. That might be an oversimplification. So Urvashi, I understand you'll be talking a bit about automating eKYC and potentially reducing dropout as a result. So yes, the floor is yours, Urvashi.
Thank you so much. Real pleasure to be here. Thank you for having me, both SFA and RAS. And it's been a very educational session so far. And I hope that I can do justice by sharing some interesting nuggets on KYC and IDV during my presentation. So let me start with sharing my screen. This is usually the most complicated part of the presentation, and make sure that this goes okay. Can I just check that you can only see my screen and not the presenter view?
We can see the screen only, yes.
Perfect. Okay, great. So before we dive in, a little bit about myself. My name is Urvashi. I also go by Urvi, and I'm the General Manager for Onfido in Southeast Asia and ANZ. And I guess, before I dive into kind of how we work with remittance players and really a lot of fintech players globally, some context about how we fit into this entire journey, right? So we heard some of the previous speakers speak a lot about transaction monitoring and record keeping for basically any fintech platform that's onboarding users. Now we're very much at the first part of it, which is the customer identification. Basically, providers of financial services need to make sure their clients are identified, either by their ID card, just to make sure that they are who they're saying they are before they give them access to make transactions on their platform. So that's a little bit about kind of the segment that we play in. A little bit about Onfido. So we're a team of over 400 plus. The company was started now 9 years ago in London, headquartered in London, but we have offices globally. We have checks available, identity checks in over 195 countries, and we process over 4,500 document types globally. Now these document types are typically government issued photo IDs, which serve as identity documents in those countries, typically national IDs, driver's license, passports, and the more commonly used IDs in countries. We have over 1,500 clients globally and have been lucky enough to get over $200 million in funding. Now, so within identity verification, there's a few challenges that remittance platforms regularly deal with, right? So firstly, our customers are online now more than ever before. And really the battleground has shifted from in-branch to now basically a digital native experience that competes with the likes of Apple and Google and other best-in-class challenger banks. So ease of sign-up is really quite key. If the platform is difficult to create an account on, the user can easily move on to the next platform. Secondly, KYC matters more than ever. We no longer see our customers in person, so we need to ensure that compliance is rigorous. And thirdly, we're all being asked to do more with less in our budgets owing to the uncertain landscape. However, it's very timely in this presentation that MAS is coming out and really providing support for basically digitizing all these processes. So I think our companies in Singapore are in a good position in that sense. Now, how do we do this? So I'm going to focus the latter half of my presentation really on, what are the few factors that platforms should, really be aware of when they're designing journeys for their users to get onboarded. But before that, I want to kind of show how digital verification providers like Onfido do it, because then the whole, what I explain later on in the presentation will make a lot more sense. So the way platforms like ours work now, everyone has a different approach to it, but it's really about making sure that we are able to help customers verify who users are saying they are. Now, the way Onfido does it is by creating identifiers that are secure, user-friendly, and built from the real-life person. We do this using two things. One, which is something you own, so that's your government ID. It's unique to you. Like I said, it can be a passport, driver's license, ID card. And the second thing is something you own and you can never lose. And in our case, we use the face. And so a combination of these two allows us to create a real identity for a user when they're signing up, and then ensure that they are using that same identity whenever they're trying to access, and we ensure that the same person then who signed up is really accessing their account every time they log in. So what does it mean for you and your users? So there's step one of the process, which is getting the user to take a photo of their ID and for us to confirm that the ID is legitimate. Then the second step is the facial verification, which is done by matching the photo in the ID to the photo of the user. And this comes with a choice of either a selfie or a video, right? So the user can either capture a selfie or a short video. Of course, the video is higher friction, but it's more valuable for, I guess, use cases where fraud is a much higher concern. The selfie is slightly lower friction, but allows us to capture, the person's face. And then we basically match the two photos to make sure that the person signing up is the same person in the ID. And we assign a facial similarity score using our machine learning algorithms. They're 15 times more accurate than humans at comparing and matching faces. So that's really the two-step process that Onfido uses to help create that identity. And I just want to illustrate this and make it a little clearer by sharing a little demo video, because I think that would really help people understand what flow users see when they sign up. I want to see if this works. I think I'm going to have to stop sharing this and share the video. Just a quick check. Everyone can see the demo screen, right?
The demo screen, it looks like your screen, your monitor right now.
Okay, sorry about that. Let me try again. Okay, now is it visible?
There's a video.
Perfect.
Okay, yeah.
Welcome to Onfito's SDK demo. A user can verify their identity in as little as 15 seconds. First, they select an ID type and an issuing country. Then they take a photo of the front of their ID, and then the back, so we can verify that the ID is genuine and hasn't been tampered with. Then we compare the ID photo with a selfie or video captured in-app. We calculate how similar the two faces are by analyzing a number of biometric data points. The user submits their verification, and the results are sent to you.
Okay, so that was really the demo of what a user experiences, an example when they're trying to sign up with a financial services platform that's using providers like us for IDB. Now I'll just flip back to my presentation quickly. Okay, so now that I've shared, how is it that we can help with digital identity verification, I'm going to move into kind of what are the key things that fintech platforms should really be looking at when they're trying to onboard clients seamlessly. And the four things are convenience, proportionality, asking for less, and removing fear and protecting users. Now, first is convenience, which is really table stakes in onboarding today. If we look at the evolution of how account opening has really evolved in the last few decades, it used to be traditional and in branch where it would take days. Then in the last decade or so, we moved to being able to verify identities using databases, and we moved to same-day account opening, where the card could potentially even get printed in the store. But today, we are very much in the situation where users expect to be able to open an account within minutes from the comfort of their home. They get access immediately, they get a virtual card, their unique account numbers are basically provided to them, and they're able to start making transactions and sending money from one country to the other basically within minutes. And so convenience is being able to provide this convenience has become table stakes in the industry. Now, however, we can't just make it really, really easy for users to sign up, because friction is really important, because platforms do need to collect important information to make sure that the user is KYC'd correctly. So this is a very tough balance, because what we find today is 45% of people actually abandon the sign-up process due to a poor user experience. So this basically friction that we're creating needs to be managed really well. Friendly friction can actually make your users feel safer. It's not realistic to aim for frictionless. It's what keeps your users safe. And I'll get into how to really strike that balance a little bit later into the presentation. So how Onfito is able to help with that is, you just saw a little demo of our SDK, but what you didn't see is that there's actually a lot of basically real-time feedback that's built into the app. So when a user is actually trying to take a picture of their ID, if there's glare on the ID, which is obscuring parts of the ID, the app will actually inform the user that glare is detected and they need to try moving away from direct light to get a clearer picture. At the point of taking the picture, if there's any blur, then the app will again, inform the user to take a clearer picture, and will make sure that the important features of the ID are being captured when the photo is being sent to us. Now, the reason this is really important is because the higher the quality of the photo that's passed to platforms like us, then there's a higher chance that the applicant will be processed and be passed on their first try. As you can imagine, asking users to sign up again and again can get quite frustrating for them. So this is really the optimizations that we've made in our technology to make sure that we have a very high pass rate. And based on a recent case study we did with one of our global users, we're able to actually achieve a 95% pass rate via the SDK being used to capture user details. So this way, customers don't have to pay for images that can't be processed, and users don't have to keep going back and repeating the process again and again. Now, the next thing that's really important to keep in mind is proportionality, which is risk, making sure that we employ a risk-based approach for a delightful experience for customers, and which we touched upon lightly. Earlier, it's really important to make sure that the process has just the right amount of friction that doesn't frustrate users but keeps them safe. So because this what this chart is really showing is how one can think about risk. So for example, if you have a low risk customer signing up, they're just opening an account, you're not giving them access to any transactions yet, then it could be as simple as an identity database check, or in Singapore that would mean getting them to verify using their SingPass, for example. But if the user is, say, about to move tens of thousands of dollars on the platform, and it's a high risk moment, and the platform really wants to make sure that it is the same person who opened the account, then at that point a flow like on Fido can kick in, where you ask the user to basically capture a video of themselves to make sure that the original person is present. We're matching their face with what they would have used to sign up, and also making sure that and that way basically it allows one to make sure that it's not a fraudster sitting somewhere that has hacked the account and is able to make transactions using the account. So what's important for platforms is to make sure that it's just the right level of friction is being inserted at proportional to the potential fallout from the transaction. Now, what does that mean? So there's a lot of things that platforms can do in terms of designing the sign-up flow. So depending on the use case, you could position the identity verification at different points during the journey. So it could be opt-in as part of the profile setup, and the user could choose to get verified later instead, and they can set up their profile first. That's one way to make sure that the user has access to the platform before they make any transactions. There are some platforms who also only trigger the IDV flow at the point of transaction or to finalize a transaction. You could make sure that the IDV is triggered just a few days after the transaction or before the service is delivered. Of course, during sign up and onboarding remains one of the most classic use cases. Or it could be, stepping up authentication during high value transactions. So let's say a user signed up with just a doc and selfie, but we ask them to record a video to re-verify themselves and match their face for a high value transaction. So the reason we've seen a lot of fintech platforms experiment with this is because asking for identity information at the start of an onboarding flow can be a big request for users who may not yet be sure that they want to use your service. But as we know, for financial services businesses, this is a regulatory requirement. So it is quite important to understand the use case and level of user commitment to then work out what makes best sense. As an example, for one e-commerce customer, we added over $1 million in annual revenue by moving the verification page to after checkout. It meant buyers could proceed with their purchase smoothly, but payments were held until verification was complete. So this way, users are really more likely to stay engaged, as you've already shown value from the platform before you ask them to go through the sign-up flow. Now, the next thing is asking for less and doing more. And what this really means is really reducing the onus on as much as possible for customers to provide the information and doing more of the hard work in the background on our own. Now, one example of this could be, for example, dropping the proof of address requirement to again, the document plus video liveness verification. Now, of course, this is, it is very important that these decisions are made with regulatory requirements, fully in mind, because there are certain regulatory regimes that will require the proof of address, in which case this would absolutely not make sense. But, in some cases where regulation is allowing document and facial verification, remotely, which Singapore does, by the way, then then it makes a lot of sense, because what happens is at the point of sign up, when a user is asked to maybe take a photo of a utility or a utility bill or a bank statement to prove their address, this can be quite cumbersome because it's likely that they don't have it on hand and they might have to go search for it, which would result in the sign up process being abandoned. However, if it's just a document and selfie verification, then there's really no impediment to them completing the process right then and there. And lastly, and by far the most important, is to remove the fear and build trust. And I'll be the first to admit, like, even being digitally savvy and working in this industry, I do feel nervous when making large transactions, sending money to different countries. And I do feel a certain sense of comfort still by walking into the bank branch. And this is really like, what it comes down to is if users can trust your platform, then there really, no reasons for them to not use it on a regular basis. And so the way Onfido does it is, we've basically built a risk engine that looks at three things, in detail. One is making sure that the document is valid and genuine. And so we check the document for data fraud. We check it for visual fraud. And we also then check for user impersonation. So, because we have that, facial liveness portion, fraudsters are very smart. They find ways to kind of mimic being the person that they're trying to pretend to be, using 3D face masks, 2D printed masks, emulators. So we've really built a lot of technology to try and make sure we catch as many of these fraudulent attempts as possible. How do we do it? So this part is, a little more fun. So for example, if we just take a look at, the photos of these IDs in front of you, they might look very similar at first glance, but could you guess which one is fake? The reality is 5 out of these 6 are fake. And so, there's very, very small changes that fraudsters can make, such as changing one number on the ID, tampering with a security feature, or lack of a security feature if they're not using an original template, editing the image either via Photoshop, or physically. We're checking for pixel tampering to make sure that the ID is original. So there's a lot of fraud signals that that our machines basically look for when trying to verify whether an ID is genuine or not. So a few more examples. Our cameras zoom into IDs and make sure that they're able to catch font anomalies like this. As you can see, the rest of the font was at like the 3 on the left, but then we saw one number edited to be like what on the right. Now there's no way a trained analyst would be able to catch that, but using powerful machine learning algorithms, we're able to flag cases like this. Another example is adding my photo onto the document. Now in this case, someone can just overlay their picture, but we're able to tell, Onfido's algorithms are able to identify that this looks like a physically swapped face with 0.98 confidence, whereas this looks like an original face. The way they do it is they really zero in on the edges of the photos to check for physical and digital tampering. Now, another one is original document present, right? So in this case, our algorithms are basically examining the edges of the document to make sure the original is present. What fraudsters often do is they try and take a photocopy of a document or pull up the document on the phone and try and basically trick the system. So again, we're able to tell this looks like a photo of a print. Here, we're able to tell this looks like the photo of a screen. So we're really checking to make sure that the original document is present as a major part of the check. But it's not easy. It's quite challenging because fraudsters are constantly getting more and more sophisticated, and digital fraud is increasing by the day. So another fun game here. Can you guess which of these faces are fake? So it's actually a trick question. They're all generated by AI and they're fake. And so if we want to check that somebody has a real face, it's no longer possible to do that without really being able to capture that live. And so that's really the aspect of liveness that we check, is making sure that the person whose picture is being uploaded is actually present at the time of taking that photo. So let me skip ahead to the liveness portion. So how do we do it? We have spoofing detection built in, where we can tell if it's a genuine selfie or if it's a picture of a picture. Again, we basically, zoom in using our machines and examine any pixel, anomalies, and we're able to tell to a high degree of confidence whether the original user was present or whether they're trying to basically fake it. The same thing with the video. This is a genuine video where we can detect the face, whereas this is a video on a screen. And again, we're able to tell that this person is basically a fraudster trying to fool the algorithm. So by analyzing the texture, the machine identifies that this is a spoofing attempt. One of the earlier slides I wanted to cover, so this is facial similarity scoring. So the core of the facial match that Onfido does is basically take the photo in the ID and the actual selfie, and we basically assign a score from 0 to 1 to identify how similar the faces are, 0 being very different and 1 being very similar. So this score is returned to platforms, and then they're allowed to basically build their own judgment and logic of it. Some platforms might say, I want a very high score, say 0.9, and some other platforms with a slightly high, lower value transactions, slightly higher appetite for risk could say, okay, I'm comfortable with the threshold being 0.7. So that's another integral part of how we validate the user is who they're saying they are. So that's a little bit about how we really detect fraud. There's quite a few examples, and I'm happy to share in more detail at a later point. But the bottom line of all this is that personalization plus trust is really what's required to create the customer centricity that I think it's very important for fintech platforms to be able to offer to their users. And really, digital transformation it does not need to be a dreaded phrase. It's not about ripping out and replacing your entire organization and systems. It's really about starting with very small changes, such as onboarding users remotely, giving them a lot of confidence about the security and fraud detection capabilities, and increasing their trust. And we find that this is starting to work. According to Experian, in a recent study, 3 out of 4 users in the APAC region actually have more trust in their digital banking experience if they experience an element of biometric security during the user onboarding. So that's, I'm going to keep it short. That's, a little bit about how we think platforms should be designing their user journeys and how we work and we can help. We're lucky enough to work with a lot of the top remittance players, both globally and in APAC. And I'm happy to share more data in terms of statistics and for example, cost savings or the speed of user turnaround time that platforms can really benefit from when using our solution. As one example, Money Match is a Malaysian remittance firm, and they actually achieved an $8 saving in cost per verified user by integrating our technology into their platform. So happy to chat more about this. It's been a delight speaking to all of you today, and I'm happy to answer any questions shortly.
Thanks so much, Urvi. We do have a few questions from the audience. I think one is from Rajinder, who's been very active today. So he's asked how would your system, I guess, extend to include KYB beyond KYC? Because he says you've touched on KYC. Can it also support KYB?
Absolutely.
Yeah.
Today we don't. What we do is we can identify the beneficiary owners, shareholders, and directors of companies or entities by performing KYC on them. But we don't today offer KYB services. This is something that Onfido is looking into and plans to offer before the end of the year. But as of today, we don't have it.
Okay, and I think there's another question, a couple of questions from Krishna. The first one is, how does the tool account for or pick up or alert for identical twins?
Yeah, that's a gretake question and something that we get quite often. So I guess the first answer is that it doesn't. Now, if assuming that, let's take the scenario of identical twins where a person uses his twin's ID to sign up. So not his own ID, but his twin's ID, and it has the same face on it, right? So we won't be able to catch that because maybe our technology can, depending on how different their faces are. But there's a likelihood that we won't be able to catch that. What we will be able to do is, though, if that person tries, if then the second member of that set of twins tries to sign up, we will know that this face has been used to sign up before, and we will flag it as a known face. And so that's really how the the customer can then, they'll know that it's a user with the same face is trying to sign up again. And that can basically, that information can be used by them to decide if they want the user to come in and provide further verification.
Makes sense. Okay. Another question from Krishna is, which of the regulatory regimes in APAC have supported this technology as acceptable remote onboarding risk management?
Absolutely. So I think it varies from regulator to regulator what their approach is. Some are more hands-off, and I think with MAS they are aware of us, they're aware of companies like us, and they're more than happy for companies to use us. Of course, then once the licenses are being issued, they ask us to provide supporting documents to companies using us to make sure that they're comfortable with our approach. But we have many customers in Singapore, so for now we have, and based on the circulars that MAS has put out, we have no reason to see us as non-compliant. We actually comply with the information in the circulars, but MAS will never come out and say we license this provider or we don't license this provider. But then if you look at Malaysia, for example, that's been slightly more interactive, where we participated in Bank Negara Malaysia sandbox and really liked our technology and actively recommended to customers in Malaysia. So we have customers in Singapore, Malaysia, Hong Kong, the Philippines, Australia, New Zealand. So those are areas in APAC where we're being used very widely. The countries where we're not being used widely right now is Vietnam and Indonesia. And that's mainly due to not any challenges with our technology, but it's more data localization requirements in the regimes that require that their data get processed only in country. And because Onfido is a SaaS provider and our servers are currently in Europe, so the data does have to leave for a short time to be processed before it's returned back to the geography where it came from.
Okay. Well, the last one is from Cherry Yap. She's asking for your contact number, but I guess you could probably reply her or flash your.
Absolutely. Yeah. I can share my email address and contact number in the Zoom chat. Is that okay? And happy for anyone to reach out if they have any further questions about our tech, anything that they'd like to learn about what I spoke about today. So should I just share that in the Zoom chat?
Yep, that works.
I see another one. I guess, should I take this? It's, do you store customer data?
Yes, go for it.
So we don't. We're data processors. We don't store data, and we leave the control completely with our customers as to when they want us to delete the data. But of course, they have to make sure that they download the data first. So on the user dashboard, customers can set up rolling deletion. So once they download the data, we will delete it from our end.
Okay, cool. Okay, do we have any more questions? Take a look. Nope, I think that's about it. So with that, Urvi, you're actually our last presenter. Thanks for hanging in there for a slightly extended afternoon. So it's been great. I think it's been very informative and really impressive with the Onfido system. So yes, thank you for your time.
Likewise.
All right. Eunice, is there anything else that we need to proceed with, or Chiwai, before we conclude?
No, thank you, everyone.
No, nothing for me. So hopefully, thanks to everyone who has been very attentive. I'm sure competing with PM is not easy job, but certainly what we have covered very important topics in the minds of many of our members. Do stay tuned. We will continue to engage you further in our subsequent sessions with other topics. Prelude would be just involving banking services, also in the areas of how we can support some of the more traditional remittance companies. So stay tuned. And many thanks to Ming Wang for helping to organize this session and also be our MC.
No, credit very much to Chiwai, Alvin, and definitely Eunice for taking a really active role in this. So okay, I guess that's that for the session. If the audience has any further questions, I guess please feel free to reach out to any one of us. Is there a contact that we should flash across the screen, Eunice, or?
Yeah, after you close the browser, there will be a link for survey that for you to fill up. Also, there will be a contact email at the end of the browser and tomorrow follow-up email as well.
Maybe
Okay.
just a closing word is a disclaimer. By no means are we as a subcommittee all the partners lining up in this. We had lined up in this session. I think this have been partners who have been very willing to share with the audience. That's why we've, in the essence of time, we've engaged them. There are many other equally capable providers in the market. As a SFA, there is a subcommittee that is dedicated to tech, and they have also sort of met all the industry players, different segments. So I do encourage if you are interested to understand more about different players, servicing different aspects of Red Hat, go visit the SFA website on the Red Hat subcommittee.
Okay.
Thank you.
With that, thanks everyone. Stay safe. Take care. Bye.
Bye. Bye.